a freelance web developer lands a $40,000 contract. 3 months in, the client claims the site caused a data breach. They sue for $180,000. The developer had no business insurance. He paid $74,000 out of pocket after legal fees and nearly lost his house. This was not a Fortune 500 disaster. This was a solo operator who simply didn't know what he needed before taking on his first serious client. You are one bad project away from the same outcome. Here's what the policy actually looks like. Most self-employed people conflate personal and business risk. Your homeowner's policy does not cover business activities. Your personal health insurance does not cover workers' comp claims. And your personal umbrella policy explicitly excludes business liability in almost every case. The moment you accept money for a service, you have created a business, and with it, a category of legal exposure that your personal insurance will not touch. The gap between what you think you're covered for and what you're actually covered for can be measured in 6 figures. There are 4 insurance products that matter to solo operators and small business owners. General liability, professional liability, also called errors and omissions. Business owner's policy, which bundles the first 2 with property coverage. And if you have any contractors or employees, workers' compensation. You don't necessarily need all 4 on day 1. But you do need to know which ones apply to your specific work before you sign a client contract, because many contracts now require proof of coverage as a condition of engagement. General liability insurance covers bodily injury and property damage caused by your business operations. If a client visits your home office and trips on the stairs, general liability. If you're a photographer and your equipment knocks over a $6,000 vase at a client's home, general liability. A standard $1 million per occurrence policy with a $2 million aggregate runs between $400 and $900 per year for most solo operators. If a client or venue requires proof of insurance, this is what they're asking for. It's the foundational layer. Professional liability insurance, also called E&O, errors and omissions, covers claims arising from the advice you give or the work you deliver. This is the policy for consultants, designers, accountants, coaches, marketers, writers, and anyone whose primary deliverable is expertise or a work product. General liability won't protect you if a client claims your strategy costs them revenue. E&O will. A $1 million E&O policy runs $500 to $1,500 per year depending on your industry, revenue, and claims history. For tech, finance, and legal adjacent work, it is non-negotiable. A business owner's policy, BOP, bundles general liability with commercial property coverage. If you have equipment, inventory, or business property worth more than a few $1,000s, a BOP is almost always cheaper than buying those coverages separately. A typical BOP for a solo service business runs $500 to $1,200 per year. Workers' compensation is required by most states the moment you hire your first W-2 employee. In some states, it's required for certain categories of contractors too. Premiums vary by industry classification and payroll, typically running 1% to 3% of total wages. The strategic move for most solo operators is to start with a BOP and add E&O as a rider or separate policy when your client contracts require it, or when your work involves advice, designs, or deliverables that could be disputed. Many insurers now offer online quotes and same-day coverage. Next Insurance, Hiscox, and Simply Business all specialize in small business policies. Compare at least 3 quotes. The cheapest policy is not always the right policy. Look at per occurrence limits, aggregate limits, and what's excluded in the fine print. One thing many small business owners miss: business insurance premiums are fully tax deductible as an ordinary and necessary business expense under IRC, Section 162. A $900 general liability policy costs you roughly $630 after taxes if you're in the 30% effective bracket, state and federal combined. Document the premiums in your bookkeeping, categorize them under insurance, and deduct them on Schedule C or your business return. Don't pay for coverage and then forget to claim the deduction. That's a double loss. Review your coverage once per year when you file your taxes as a natural trigger. If your revenue grew significantly, your exposure grew with it. If you added services, hired subcontractors, or entered new client verticals, your existing policy may no longer match your actual risk profile. Some policies have revenue caps above which coverage lapses. A $500,000 revenue business operating on a $250,000 cap policy is effectively uninsured for half its risk. Annual review is not optional. It is the maintenance cost of running a real business. Business insurance isn't glamorous. It's the thing you pay for and hope to never use. But the year you need it and don't have it is the year your business ends. Get the right policies before your first serious client contract. Deduct the premiums. Review annually. If you want to go deeper on the legal side of client relationships, the video on contracts for freelancers walks through exactly what your contract must include to protect you when a client turns difficult.